Hi, everyone. Welcome to a new episode of Living in the Good Space. I am your host, Annette Johnson, the Fly Coach, and I'm really excited to share this conversation with you today. I met my guest today a few years back at a previous employer where she came in and she talked about financial well-being. And it's something that has just stuck with me over the years. So I'm really happy and I feel honored to be able to bring her on to Living in the Good Space to share her expertise with you. Let me tell you a little bit about who she is. Lynnette Khalfani-Cox, the Money Coach, is a TV personality and a New York Times best-selling author and an award-winning journalist. The Money Coach's mission is to increase financial literacy worldwide. And she's done some tremendous and noteworthy work in this space. She was most recently acknowledged as the new H&R Block spokesperson for a fintech platform called Spruce. You may have seen her on some national TV programs such as The Oprah Winfrey Show, Dr. Phil, The Tyra Banks Show, and Good Morning America. And she makes regular appearances as guest commentator on CNN, Fox Business Network, and MSNBC. And so please help me welcome to Living in the Good Space, the Money Coach. Hello,
Hi there,
hello.
Nick. Hello. Great
How
to
are you?
join you on Living in the Good Space. My pleasure to be with you.
Thank you so much. I'm so excited. I was like sleepless, anticipating our conversation. I've been a fan of yours for years. First met you at Prudential. I believe you came in to speak to the business resource group at that time, and your bestseller, Zero Debt, The Ultimate Guide to Financial Freedom, is the book that you were sharing with us at that time. So I'm really excited for you to be able to share some what I call goodies with my followers. And I recognize that when you talk about financial well-being, as with many things, everyone's not in the same space, right? So I know that some of my viewers are at an advanced stage in terms of investing and saving in their financial portfolio. And then there are others who may be really wrestling with how do I make saving and investing and retirement planning a priority given the state of affairs today when so many people are just trying to make ends meet and fulfill their financial needs, pay the mortgage, the rent, keep food on the table, etc. So I want to start from your testimony because I think it's powerful. And for me, when people like you are transparent in that way, you become a trusted voice for me because I know that you understand the highs and you understand the lows. And you share your testimony about being $100,000 in credit card debt. And so share with us, what are some of the things that you were doing to kind of regain your confidence from a financial wealth standpoint and start to transition from that space to where you are today?
Right. So you're right that back in 2000, 2001, I had $100,000 in credit card debt. And fortunately, I managed to pay it all off in just 3 years. I never missed a single payment. And then I wound up writing that book that you mentioned called Zero Debt, The Ultimate Guide to Financial Freedom. It became a New York Times bestseller. We went through the second edition of it and then the third edition of it because over the years, unfortunately, the debt problem in America has only gotten worse. But I was able, well, first, let me say how I got into debt, because again, I do like to be transparent and honest about not only just the successes and the good things. I like to tell people the mistakes and the setbacks and whatnot that I've had as well. In my case, I was kind of a classic overspender and a rather poor money manager at the time. I now know from my coaching business the last 19 years, I now know that folks who get into debt, they really kind of fall into one of two categories. Either they're like I was, kind of overspenders, poor money managers, or they've fallen victim to circumstances in their lives. Something has gone wrong. And I usually call them the dreaded Ds: downsizing, divorce, a death in the family of the main breadwinner, disability or disease, because if any one of those 5 things happens to you, obviously it can throw your budget totally out of whack, and it could force you to just, whip out that plastic all the time and have to pay for stuff. So I was spending too much, girl. That's the bottom line. I was just, if I wanted to go on trips, I just went on the trip and said, I'll pay for it later. If I wanted something for my kids or whatever I wanted to do, I just kind of bought it and spent without really being mindful and certainly not being intentional in my purchases at any level. Now I have what I call a zero debt mentality. So not only have I been able to, pay off obviously that $100,000 in credit card debt, but even subsequent to that, the harder challenge, honestly, is not just getting out of debt. The harder challenge is staying out of debt.
Yes.
Because you have every opportunity under the sun to constantly spend. And so we have to, be mindful of our spending. We have to evaluate our purchases. We have to think about, frankly, whether or not we're spending in alignment with our values. So now for me, the spending is completely different. Not to say that I don't like trips, because girl, I want to go on a trip like the next person. Okay. I like to go and have my travel. However, I'm going to be mindful about it. I'm going to be thoughtful. I'm not going to let any credit card debt lingering and hanging over from a trip, things of that nature. And I'm going to be more focused on the stuff that is really of significance to me, like my family, like my own retirement savings, like my own future legacy, and the things that I want to leave and pass along to my kids. I feel prouder of, having bought my older 2 kids their first homes than I do, say, of, blowing money on something, years and years ago that I can't even remember or tell you what I spent it on.
Right.
So my spending and my mindset is a lot different these days.
Yeah. And I hear people talking about having a financial legacy. Talk a little bit about how do you even go about doing that? Because I agree with you. I mean, I'm having conversations with my daughters right now about properties. And I have people in my circle that have helped to set their children up with wealth through real estate. And so talk a little bit about what you mean by having a financial legacy.
Sure. Well, my husband Earl and I, again, obviously we co-own our financial education company, the moneycoach.net, together. We've had this business for 19 years. So it's been like, woohoo, we're really super happy about that, right?
Yeah.
But entrepreneurship has blessed us in many ways. It's given us a lot of financial options. And it has, in fact, been one of our pathways to wealth building. But in the course of our own wealth building, we've decided as a couple that we want to give our 3 kids what we call a wealth starter kit.
Yes.
So, our oldest, our daughter is 24, our son is 22, and then our youngest, Alexis, is 16 years old. Long story short, bottom line, we've told our kids essentially, listen, mommy and daddy have a plan. And we want you to stick to the plan and do your role in the plan. And if you do, we'll help you in your own journey to wealth creation. We will put you through college debt-free, so you won't have any student loans like 3 out of 4 college graduates have these days. We will buy you your first car also. And yes, we'll buy you your first home. We'll give you that piece of property as a starter tool, as that journey to making that leap from renter to owner. So again, for our older 2 kids, while they were in college, for Aziza, the oldest one, who's now 24, who's graduated from University of Texas at Austin, and who got married a couple years, 2 years ago, and then went on and bought another house. But when she was in her freshman year, going into her sophomore year, we bought her first place, and she lived there for about 4 or 5 years. We bought her a condo in Austin. We still have that condo. Then our son, who is, again, the 22-year-old, he's a senior in Raleigh, in North Carolina, at North Carolina State University. Again, when he was a freshman going into his sophomore year, that summer, we bought him a townhouse, paid cash for his townhouse. And then we actually subsequently rented it out with a tenant with him. He still lives there, but he had a roommate. And so rental income from that. And then our youngest one, Alexis, the 16-year-old, she's like, when I get a place,
she's ready.
When do I get she's asking for a car and she's asking for a house. Okay. We're like, you got a couple more steps to go, because we've told them, what's your job? Your role is first and foremost to be a good person.
Yes.
And to be a good student. And so if you stay on the path and do, what you're supposed to do, then mommy or daddy will, kind of backstop you and do what we've pledged and promised to do. And so far, the plan has been working out brilliantly, So Earl, we bought my daughter, the oldest one, her first car, and she got it actually when she was out of college, after she graduated from college. She didn't need a car when she was on campus. Our son, he said to us, he's a person with a very strong work ethic. He was like, oh, mommy, daddy, I appreciate everything you guys have done for us. And I'm grateful. He said, but I actually want to save up and I want to buy my own car. So he worked and worked and he saved his money. And sure enough, he bought himself his own car, a used vehicle, an older car. He spent, I don't know, I think about $3,000 or $4,000 on it, but he bought his own car. So, yeah, Alexis, she's like, oh no, buy me something.
It's interesting, right? It's interesting how different our kids
money
are,
personalities.
Right?
Yeah,
Yes,
they all have different money personalities. So
yeah.
But that's part of our strategy for, again, for leaving the legacy. I'm very mindful of the fact that Black wealth creation has been enormously difficult in this country for our 400 plus years that we've been in America, for a whole host of reasons, obviously systemic and structural issues and barriers. When we look at property, for example, as a pathway to building wealth, we know that right now, only about 42% of Black folks own homes in America, compared to about 73% of white Americans. So that's part of why we have, such a big wealth gap. Just one factor. There's an income gap and a whole bunch of other stuff we need to talk about. There's policy issues, of course, that need to be addressed. But again, we're doing what we can to, leave a great legacy for our children.
Yeah, and I'm so inspired by that story. I hope others are too, because the reason why I like having these conversations is sometimes you might feel like your specific, surroundings or situation, it limits you, and because of your circumstances, you can't break beyond that. My mom couldn't leave me a property or help me out financially, but and my grandparents were in the same situation. However, what they did through their life and how they lived, it gave me some really strong messages that I still have with me to this day. My grandparents owned their home, and so I got to see what home ownership was. And work with them. And my grandfather taught me how to, work in the yard. That's how I earned my pennies. I would help him do yard work, and I didn't like it, but I would help him do that, and I would get my pennies. And then he taught me how to open a savings account. We would sit in the living room, roll pennies, and I remember having to write my name and account number on there. We would walk up to the local bank, make the deposit. I'm really aging myself. They'd stamp the passbook. And then with my mom, she was a zero debt person, so to speak. She did not have any credit card debt. When I had to move her into long-term care, there was no financial impact on me whatsoever. Like, there were no bills that needed to be paid off, anything. And so I've taken those messages with me, with my children, to try to help them have a good footing as well. Even though I wasn't able to afford to buy them a house, we've always had conversations about home ownership, about good credit, about saving, paying yourself, no matter how little the salary is for your job. And I know you're doing that with ages 5 to 12. With your Millionaires Club, you're helping to shape the mindset at a very young age around having a relationship with money. Tell us a little bit about that.
Sure. And I'll ask Earl to hand me a copy of those the Millionaire Kids Club series that you just referenced. First, though, let me just say in that what a great thing that your grandfather did to plant those seeds in your mind, to talk to you about savings and your pennies, because I think it gives us a lot of good lessons, frankly. One is that you should save, right? Too often, kids nowadays just get the message that all you do with the money, the purpose of money, they think is to just spend it, right? And in reality, we have four choices or options for what we can do with our money. We can save it, we can spend it, we can invest it, or we can donate it. And so when you mentioned the Millionaire Kids Club series, that's literally, Earl just passed me the book here.
I love that series.
Yes. So it's a 4-book series, by the way. And I'm not trying to just, show all my stuff here, but let me just
No, please show all your stuff.
Oh, okay.
I want my viewers to see it. I love this series, and I love the mission and purpose of it, because I think back to even my own kids. I wish I had talked even more. We had conversations, but I don't think there's ever too much.
Right. So this series is for youth between the ages of 5 and 12, and it's called the Millionaire Kids Club series. And again, it literally teaches kids those concepts in each of the 4 books. It talks about saving, spending, investing, and donating. And so this first book is called Garage Sale Riches, and these kids have to work in order to earn money. And that's one of the great lessons that we should be talking to kids about. This one is talking about donating. Again, the kids in the series also symbolize these 4 principles, because Dennis, this little boy, is the one who likes to donate. Isaiah is the one who likes to invest. Stephanie is the spender, and Sandy likes to save money. So even the 4 kids, the 4 characters, embody the principles that we're talking about in the books. And it's multicultural, as you can see as well. This one talks about home sweet home, dealing with real life issues. We touch upon job loss and foreclosure. Again, it seems like heavy topics for kids to be reading about, but kids these days, they're sensitive. If you have a 10-year-old and daddy has lost a job, or they might be facing foreclosure, the kids are going to feel that financial stress. They're going to know what's going on. So we do it in an age appropriate, non-threatening way, but we talk about things like that. And this made me think about you, since you were saying the pennies with your grandfather, compounded interest, the value of saving money over time, and how even little bits of money can grow very quickly. And so I think sometimes as adults, even, we forget about the power of compounded interest, where you're earning interest on top of interest, and how quickly that can be magnified. You really do always want to be saving and investing. That's the way to help ensure, a really great financial future.
Yeah, and I love what you're doing, and especially starting at an early age, because we know that the tradition of a pension has been slowly but surely going away, right?
Yes.
And so young people have to start thinking at a much younger age than my age group did. I remember my grandfather saying, get a good job at a good company, you work there 30 years, you get a pension, you get your Social Security, you're set for life. Well, we are moving so far away from those staples. And I think it's just so important for young people to start thinking early. As soon as you get that first job, start thinking about what savings vehicles are at my fingertips here, that I can take advantage of.
That's right. And if you ask the youth today, Gen Z, the sort of, 22 to 24-ish and under crowd, and certainly if you ask millennials, first of all, they're very tech savvy. They're very mobile first in everything that they do. They recognize that you're not going to be on the same job for 30 or 40 years.
Right.
You're not going to have the same kind of retirement that your grandmother or, somebody else you might have seen. It's going to be a totally different thing. And when you think about things like savings, you were saying about what, kind of savings vehicles and things of that nature, they're all about using technology, apps, tools, and things that can help them to save. We were like, oh my gosh, woe is me. Where am I going to, how am I going to save?
Yeah.
Well, there's stuff that can help you to save. You
Right.
mentioned earlier my partnership with Spruce Money, which I'm so super proud of and happy to even share with your audience a couple of highlights,
Mhm.
because here's a new mobile banking app combined with a savings account that
Mhm.
can really help people to sock away money to save what they need. You
Mhm.
just download it. Basically, it's a free app that you get, the Spruce app, and you can track your spending, which everybody needs to be doing. You can
Yes.
create savings goals. You can earmark certain amounts of money that you want to save. But
Mhm.
again, the app is kind of giving you nudges and is reminding you to save, and even doing things like helping you. Let's say you're going to get a big tax refund check.
Mhm.
Um, they'll let you designate or earmark a specific amount of your income tax refund check to be saved, and not to just go ahead and blow the money and to spend it.
Mhm.
So again, tools like that can be helpful for folks. And by the way, you don't have to be an H&R Block customer to use Spruce. It's something that's available to anybody.
Mhm.
So we need to be thinking about taking some of our grandparents and our parents' wisdom, the things
Mhm.
that served us really well, but also stepping it into the 21st century, right?
Right.
And using the resources, the tools, and the things that are at our disposal now that can help us to advance and grow in ways, whether that's savings, investing, wealth
Mhm.
building, and other things.
Yeah. Yeah. And for me, automation is key. I love being
Absolutely.
able to set up my apps and not have to think about it. I pay myself first and you forget about it. You just get so accustomed to things working that way. What
It
are your
helps you to
thoughts?
develop a
Yeah.
discipline
A
too,
discipline.
a
Yes.
habit of
Yes.
savings, which is super
Yes.
important.
Yeah. What are your thoughts about insurance? I hear so many mixed messages about life insurance. Do you have any thoughts about life insurance as a means of that financial legacy?
I have very strong thoughts about it, and I'm wholly in favor of having life insurance as a tool for wealth building and for financial protection.
Mhm.
So let me just share just very quickly, since a picture is right behind me. This is my sister Debbie,
Mhm.
and this is her with Alexis. Now, this is obviously Alexis when Alexis was a baby. We used to sing her a special little song called Baby Alexis.
Mhm.
Um, my sister Debbie unfortunately passed away in
Mhm.
2014.
Mhm.
She died at age 49.
Mhm.
She had an 11-year-old daughter at the time. She died completely out of the blue, totally unexpected.
Wow.
So when I tell you that I know from personal experience that life is not promised,
Mhm.
and that you would be really wise to make sure that you have some life insurance
Mhm.
that you can pass along to your heirs, your beneficiaries, the people that you love, whoever you name and designate.
Mhm.
That would be a really smart thing to do. If nothing else, to have life insurance to at least cover your burial costs.
Right.
Because, especially in our community, in Black and Brown communities, what happens? Somebody passes away, and we see, again, all too often, they're passing the hat around. They're doing a
Yes.
GoFundMe, et
Yes.
cetera, because there's not enough money to bury the person. Um, in recent years, unfortunately, in addition to my sister Debbie passing away, we've lost a number of family members. I
Mhm.
can say that the emotional loss has been obviously hugely devastating.
Yeah.
From a financial perspective, almost all of them did the right things.
Mhm.
So my sister Debbie did have life insurance. She
Mhm.
did have a will. She did name a guardian for her daughter.
Mhm.
But last year in 2021, my husband Earl, he lost both of his fathers.
Mhm.
His stepfather, who pretty much raised him and who was married to his mom for 40 something years, he
Mhm.
passed away in March 2021. And then Earl's biological father, Earl Sr., he passed in October of
Mhm.
2021.
Mhm.
So again, if you want to safeguard your family's future, if you want to be able to pass along some assets, life insurance is one super important way that you can do that. Sometimes folks think about stock market investing. And I encourage people to invest in the stock market. I'm invested in the stock market.
Mhm.
But for many people, let's say you're trying to build up $500,000, a $500,000 portfolio. Do you know
Mhm.
how long it's going to take a lot of people to save and invest their way to 500,000? When you
Mhm.
can get a term life insurance policy,
Mhm.
probably for about 50 to $100 a month,
Mhm.
and instantly provide $500,000 worth of coverage to your beneficiaries, to
Mhm.
your,
Mhm.
to a spouse or to your kids, so
Mhm.
that in case if something happened to you, they would get the face amount of that policy. If it was a $500,000 policy, they're going to
Yeah.
get a $500,000 payout. So
Yeah.
yes, I'm a big proponent of life insurance.
Yeah, I agree with you 100%. When my children were little, my biggest fear was, something happening to me or my husband. Who did I want to raise them? That question of who's going to instill the same values and, take care of my babies the way I would want them to be taken care of. Now we're in a totally different zone because they're both adults. So now we're having conversations, which are initiated by my oldest daughter more than us, around, okay, let's make sure we have a plan if something were to happen to the both of you. Not just how much money are you leaving me? That's
Right.
not it. But what do
Right.
you want to happen with your belongings? What decisions do you want us to make if you become disabled and not
Incapacitated.
not able to make health decisions for yourself? So here we are now. I'm like, wow, this time went by really fast. Here we are now at the table having these conversations, and my husband and I having the insurance conversations, always kind of recalculating, making sure that, we're at a comfortable place. So I think when we talk about financial well-being, it's a holistic approach, and you've got to think about your health too, because we're
Absolutely.
getting older. And
Yeah.
when my mom became disabled, I was able to transition her into long-term care. I didn't have to worry about selling a house or a car or any of those things. But a lot of people, are in a different situation, so you have to think about those.
Right. And I always tell people that you need to think about your finances in a holistic way for a couple reasons. One is that money matters affect everything, right?
Yeah.
It
Yeah.
affects your relationships, because
Mhm.
if your money is not right, you're going to be arguing with your honey, okay? It
Yes.
affects your health, because if you have, excessive debt or lack of
Mhm.
savings or money
Mhm.
problems, tax bills owed to the IRS or whatever, that's going to
Mhm.
be stressing you out. You're going to have
Mhm.
sleepless nights, anxiety, depression,
Mhm.
more prone to ulcers, and so on. It's certainly going to affect your ability to get ahead on the job, because you probably will be distracted. You might have credit issues. And if you
Mhm.
have poor credit, employers are less willing to hire and or promote
Yes.
you. So
Yes.
it affects a whole bunch of things. So money matters really do need to be looked at in a holistic way, because it does touch upon some of everything. And then of course your own, mental outlook and your sense of freedom, right? A lot of people
Mhm.
wake up on Monday and they're like, oh, I owe, so off to work I
Yes.
go.
Yes.
They're
Yes.
working because they have to, not because they want to.
Mhm.
So, when you get to that point, whether it's through things like lifetime income streams that you might create for yourself to
Mhm.
replace pension income, whether it's life insurance, whether it's savings and investments, real estate,
Mhm.
stock market, et cetera. When you start to kind of create your own financial safety net, it gives you
Mhm.
a lot more choices. It gives you a lot more freedom. And honey, when I say choices, I mean the choices could be anything. It could be like, this job is really not it for me.
Yeah. Yeah.
They don't value me. I'm underpaid, I'm underappreciated, I'm walking away.
Yeah.
It could be I'm in a horrible relationship,
Mhm.
and it could be any number of issues that it's just not working for you, and you
Mhm.
might have the financial flexibility or the financial wherewithal to
Mhm.
walk away from a bad relationship and not feel
Mhm.
like, oh, I have to stay because of financial considerations,
Mhm.
right?
Mhm.
And then, of course, you really do want to have finances examined in a holistic way, because that's how you can get the best outcomes.
Yeah.
You don't want to look at one little piece of things, right? You don't want to, just look at, okay, I have saved money over here, but you're not looking at your debt. You're not looking at your investments. You're not looking at your estate planning. You're not looking at your life insurance. You really do want to pull it all together, and so that you get a complete look at your overall finances, right? So, one of the things that Earl and I did last summer was we revamped our entire estate plan. And Annette, I cannot tell you how great it made me feel, because we got every possible document that we could, need done, titled or retitled. And I mean everything from legal power of attorney to healthcare power of attorney, obviously wills and trusts that we created, and other things, property related, because in addition to, I mentioned property being one of the wealth building tools that we've used, we own 6 other properties besides our own house as well. So we got it all together, and we keep having these conversations with our kids. So they all know the will is not a mystery to them. We're like giving them copies of, we're like, here, you're going to see and know in advance, because we're not going to have that pattern where a lot of families had, where everything is shrouded in mystery. And then it's like, does mommy and daddy have a will? Or if something happens, where's the documentation? We don't want to have that with our kids. We want to create a new cycle, one of financial openness and having serious conversations about money in a way that's goal oriented. And again, that's focused on legacy and on the future.
Yeah, I agree with you 100%. And I know all too well painful stories of people passing away. And like you said, being around the table, writing checks and trying to figure out, one, how you're going to pay for the funeral expenses, but then the other, trying to figure out, well, what's next? What do you like, what do they own? What do they have? How do you, take care of their estate, their property? So definitely agree with you in terms of opening that conversation up, especially if you have children. Age appropriate,
and I applaud you for talking to your daughter, about it and everything, because that really is a better model. It's again, it's kind of old school. Before, in the past, mama, grandmama might have been like, oh, they didn't talk to us about it, or they were quiet, or and honestly, a lot of them didn't know, so we know better now, so we should be doing better, right? But I think it's very thoughtful and positive that you and your adult daughter, you guys are having those conversations, again, around life insurance, around your own specific wishes, etc. That takes so much of the burden off of them too. Because if, God forbid, if something happened to either one of you, then she would know what your intentions and what your wishes were, and then she'd be able to, more effectively carry those out.
One folder for each of them with everything, every 800 number, everything they need in one location to be able to take care of their parents. And like I say to them all the time, and I say to them, this is you two are the drivers of this. You don't need to talk to anybody else. You don't need to have conversations with anybody else. Here's all of our information, and go forth and execute on it. Before I have to let you go, I have 2 questions for you. One is, if you could just leave my viewers with 2-3 tips, and I'm not talking about my advanced viewers, right? So they're savvy investors, they've got it all together. I'm thinking about people who are trying to figure this thing out. They may not feel as confident about saving or investing, but they know that it's important. They know that it's necessary. Where do we start?
Well, the first message I would give to them is that every little bit counts. And, all too often, people mistakenly think that if they don't have a big pot of money, or if they can't regularly save large sums of cash, that somehow they're doing it wrong, or that it's not even worth it to try. And nothing could be further from the truth. So it's important to be a disciplined saver. It's important to develop the habit and the muscle of savings. And you only get that by regularly, routinely saving money. And so I like the fact when you said you love to automate things. For example, if you have something from your paycheck and you can divert it automatically into a savings account, that's great, because if you don't see the money, you won't miss it and you can't spend it, you know?
Right, right.
And so the idea, though, that I really want people to take home is that the dollar amount doesn't matter. What matters is your discipline and your consistency in saving. So you need to take a look at your budget and think about, how much can I realistically afford to save each month? If it's $25, then save your $25 a month. If it's $50, $100, whatever it is, don't make the mistake of thinking that, oh, it's just, quote unquote, it's just $50 a month. It's just $100 a month. Listen, honey, $100 is $1,200 at the end of a year.
Yes,
Okay.
yes.
At the end of 5 years, that's $6,000.
Yeah.
And again, then you start investing that money, it starts to grow. So every little bit counts. And I would really encourage people to see that those small wins, quote unquote, small wins, those incremental improvements, that's actually what powers you ahead and gives you the confidence that you're on the right track and that you can keep doing this on a regular and consistent basis and be successful at it. So again, be okay with starting small and know that that's actually helping you to secure you and your family's financial future.
Yeah. And that's my wish for everyone. Listen, I'm not an expert. I've certainly had my bumps and bruises, and I could certainly beat myself up and say, you know, you should be further along. But I think it's like you said, start where you are, start small, but just think about it as paying yourself. You know, so before you pay anyone else, make sure that you're paying yourself and that you're taking care of you. I just love being able to have a voice from someone that looks like me, that, you know, I can relate to on so many different levels, because like health, when you start talking money, the trust factor is big. You know, people don't trust people. There's just low trust when you start talking about health and you start talking about money. We can look at the whole pandemic situation. A lot of that is trust. And when you start talking about money and investing and give me your money and I'll do this with it and do that for, trust is a big factor. And so I'm really, I applaud you for the work that you're doing, and I'm really happy that I can have a trusted voice in this space, and people who look like me, who understand my culture and where I come from, and you know, the different struggles that we have to overcome to get to that vision and dream of ours. So thank you so much for being that trusted voice. Really appreciate the work that you're doing.
Oh, it's my pleasure. I appreciate you saying that. And honestly, one of the single biggest things of which I'm most proud of professionally is the fact that I've earned a trusted reputation the last 19 years in business on my own. I'm not, you know, I'm not going to be too, you know, overly humble, and I'm not going to be too braggadocious, but I will say, in all candor, that our brand is a stellar brand.
Yes.
People do know and trust us. And there's a reason though for that, Annette. The reason is they know that I'm honestly and truly not going to tell them anything that is not in their best financial interest. Like my number one thing is always, is this good for consumers? Is this going to help somebody in some way? Help them to save, help them to grow their wealth, help them to not be as stressed or as financially anxious about their money. If it's something that's positive, then I can get behind it, you know?
Yeah.
And I'm not going to tell them something that I wouldn't tell any of my own sisters or my mother to do. That's another thing, to say like, okay, is this kind of reeling on the up and up? That's why when you ask about life insurance, for example, I'm like, yes, you should absolutely. And obviously I have no, vested interest. I'm not going to get anything from it, but I'm telling you, for your own good to have some life insurance.
Yeah. Yeah. So one more question before we wrap up. I asked this of all my guests. What does living in a good space mean for you?
Well, living in the good space for me means living a holistic life, living a balanced life in a lot of ways that enable me to pursue the passions that I have and to be able to share with others what I've created. So it's about having spiritual centering in my life,
Mm,
about having my health being at its optimal level. And I'm
mhm,
working on that.
mhm,
We've spent together, Earl and I, we've been on a 4 or 5 month journey now. And
mm.
collectively, we've lost almost 100 pounds together.
Wow,
And so
awesome.
that's been a great thing that we've doing going, as we progress more even into 2022.
Mhm,
Having our finances, having my relationships be intact. To
mhm.
me, having a holistic, well-rounded, balanced life,
Yeah.
that's the essence of living in the good space. So that's it for me.
Wow, I think that's it. I think that's the goal. I think that's the vision that I have in mind for these conversations, is to talk to people who, in their own way and with their subject matter expertise, are doing it for themselves, but also are sharing and helping others do it as well. So I can't thank you enough. I know how busy you are, and I know that you're out here doing these types of interviews on a grand scale. And I just thank you so much for carving out time to have this conversation with me and to share with my viewers. Greatly appreciate your time.
You're very welcome. I'll come back anytime.
Thank you so much.